from South India. As you all already know, Akash Agarwal Classes has launched for you all 100% English lectures in English for CMA Foundation students giving their examination in December 2025 and onwards. So here I am going to tell you how do you enroll in the batch. You just have to join our WhatsApp community, which is given in the link. Fill up the Google form again given in the link, and do download our mobile application Akash Agarwal Classes to access the notes. You all know the lectures which we are going to conduct will be 100% covered. There would be no subject which we are not taking care of. So we are going to take care of each and every subject, each and every concept. We are going to take MCQs for you. We are going to provide test papers. We are going to take live mentee sessions as well. Lectures which we are going to take for you all are 100% recorded lectures and not dubbed lectures. And you all know we have exclusive team ready for you all to teach you for your CMA Foundation December 2025 attempt for subject wise as well. And we are uploading the lectures on a weekly basis. All the important links which will be useful to you all are uploaded in the description box. Since we have many students who have cleared CMA examination at all the levels from Akash Agarwal Classes, and to reciprocate the love which we have received from South Indian students, we are here for you all taking lectures 100% in English, so that we can clear your CMA Foundation December 25 attempt together. So keep studying, do watch all the lectures till the end, and do show some love by liking the video, subscribing to the channel, and putting up a word in the comment box. Keep studying. Bye-bye.
Hello my dear CMA Foundation students. So in this video, I will be covering the topic of consignment. It will be very beneficial for you for your upcoming CMA Foundation exams to clear the exams, because this topic is very important, which will be covering approximately 4 to 6 marks. Sir, first of all, what do you mean by consignment, sir? Consignment, it is a way of doing business. Consignment, it is a way of doing business. Very important term. Consignment, it is a way of doing business. It is done for expansion of business. First of all, consignment is a special type of transaction with another entity, for transaction in which one entity send the goods to sell the goods to the former for a predetermined commission. In such arrangement, two parties are located in different towns and cities. Sir, can you give some example of consignment? Very simple example. Now, Mr. A is living in Pune. Mr. A is living in Pune. He want to expand his business. He want to sell his goods in Chennai. For example, Mr. C. Mr. C is living in Chennai. He stays in Chennai. He knows the local market of the Chennai. Now Mr. A is not aware about the market of the Chennai, and Mr. A has not the knowledge of the market, or he does not know the regional language or local language of that area. So Mr. A will appoint Mr. C to sell his goods on behalf of Mr. A. It means that Mr. A has appointed Mr. C to sell his goods. That Mr. C will sell his goods. Very important. A will be providing the goods to C, and C will be selling the goods. C will be what? Selling the goods on behalf of A, and in compensation, C will be receiving the commission. The profit will be of A. The whole profit will be of A. Profit share will be given to Mr. A, and C will be given with the share of the commission. Now, consignment is a special type of transaction with another entity for selling the goods for a predetermined commission and a predetermined price. Whatever price I have tell you, that price only you will be selling the goods. The profit share will be wholly of mine. You will be getting the only share of commission. Parties to consignment. Now, Here, Mr. A who's sending the goods. Mr. A has sent the goods. It is not a transaction of purchase sale. Mr. A has sent the goods to Mr. C. So Mr. A will be a principal and Mr. C will be a agent, and it is just transfer of possession. It is just transfer of possession. Ownership has not been transferred. A has given goods to Mr. C. A is known as the principal, and it is just transfer of what? Possession and not ownership. The possession has been transferred, but the ownership has not yet been transferred. Mr. A will be the C will be the agent. Mr. C will be selling the goods to the local customer and getting the money from them and transferring whole the amount to Mr. A, because C is an agent and A is the principal, and C will be getting his share of commission. So this is a transaction of consignment. Here two parties are involved, consigner and consignee. The person who send the goods, that is Mr. A, will be known as consigner, and the person who received the goods and who is selling the goods is known as consignee. Mr. A is the consigner and C is the consignee. The person who send the goods is known as consigner, and the person who receive the goods and sell the goods on behalf of the principal or consigner and get the commission is known as consignee. So there are total two parties in consignment. There are how many parties in consignment? Two parties in consignment over here. Consigner, it is a party who send the goods to his agent for the purpose of sale of goods. The goods consigner is the principal in the consignment business. Consigner remains the owner of the goods sent on consignment till they are actually sold by the consignee. Very, very, very important. It means over here there is just and just transfer of possession. Ownership has not yet been transferred. Ownership will be transferred when the Mr. C, that is the consignee, will sell the goods to the external customer. It means that if the goods are unsold and it is with the consignee, the ownership is not yet transferred to the consignee, because consignee has not given us the money. It is not the transaction of purchase sale. It is a relationship between principal and agent. I have given my goods to you, so you are supposed to sell the goods. If you have not sold the goods, you are supposed to return the goods to me. So only the possession has been transferred. Ownership has not been transferred. Very, very, very important. Consignee. It is a party to whom the goods are sent on consignment basis by the consignee. It sells the goods and receives the consignment basis and acts as an agent in a consignment. But it means that the consignee will be selling the goods and he will be receiving the commission on consignment basis. It is entitled to receive commission from the consigner as a consideration. You know, consideration means what? Something in return. You are giving me the services of agency, so I am supposed to pay you some commission in consideration, that is something in return. You are doing work for me, so I will be paying you something in return, commission. Now, distinction between consignment and sale. First important point. There are how many parties in consignment? Two parties. One will be consigner, another will be consignee. The person who send the goods, is known as consigner, and the person who receive the goods, who will be selling the goods, is known as consignee. Here there is transfer of possession and not ownership. Profit share will be wholly of the consigner. Consignee is entitled for the commission only. Very, very, very important. If the goods are unsold and it has been with the consignee, the ownership is with the consigner, only the possession is with the what? Consignee. What is the difference between ownership, consignment and sale? The difference of possession and ownership. In case of sale, possession and ownership both has been transferred. In case of sale, possession and ownership both has been transferred. In case of consignment, only ownership has been transferred. Very, very, very important cheese. In case of consignment business, only ownership, only possession has been transferred. In case of consignment, only possession has been transferred, but in case of sale, possession as well as ownership both is transferred. In case of consignment, legal ownership of goods rests with the consignor. It is the only the possession of the goods which is transferred to the consignee. In case of sale, the legal ownership of the goods is transferred immediately from the seller to the buyer. It means that in case of sale, ownership as well as possession both are transferred, but in case of consignment business, only and only possession has been transferred. I hope so everybody is getting this point. What is the major difference between sale and consignment? In case of consignment, only possession has been transferred, but in case of sale, ownership as well as possession both has been transferred. In case of consignment, the relationship between the consignor and consignee is that of the principal as well as agent. The consignor is known as principal and the consignee is known as agent, and continue will till terminated. It means that the relation will be terminated when the consignment is over. While in case of sale, the relationship between the two parties are the buyer and the seller and terminate as soon as the payment is made and the goods is transferred. It means that in case of sale, there is relationship between buyer and seller and it will be immediately terminated, immediately over when the payment has been made for goods. Very, very, very important. In case of consignment, the risk of loss or damage to the goods remains with the consignor. In case of consignment, the risk is fully with the consignor because consignor is the principal and ownership is with the consignor. Consignee will be only having the physical possession of the goods till the goods consigned are sold by the consignee. In case of sale, risk attached to the goods passes along with the ownership. In case of sale, the risk is immediately transferred from the seller to the buyer. But in case of consignment, it does not happen. In case of consignment, the risk is fully with the consignor, that is the principal. In consignment, the consignee usually bear the expenses incurred by the consignee. Consignee will be responsible for all the expenses which will be incurred by the consignee in connection with the goods consigned to him. In case of sale, the expenses incurred by the buyer after its completion of sale will be borne by him. It means that any expenses which a consignee incur after the goods are transferred to the consignee, it will be borne by the consignor. The responsibility will be of consignor. But in case of sale, the expenses which has been incurred by the buyer after the completion, it will be borne by him only. In consignment, account sale is required to be submitted periodically by the consignor to the consignee to the consignor. It is a point of MCQ. It is a point of MCQ. In consignment, account sale is submitted periodically from the consignee to the consignor. But in case of sale, no account sale is required to be submitted by the buyer to the seller because there is a type of direct invoice. In consignment, goods are sold by the consignee against commission, while in case of sale, goods are sold against the price. Now, very, very, very important. I hope so everybody is get with the difference between the consignment and sale. In consignment, only possession is transferred. In case of sale, possession as well as ownership both are transferred. Here is the relation between principal and agent, and over here the relation is between the what? buyer and the seller. Over here, the risk is with the consignor. Over here, the risk passes with the buyer. Here, the expenses incurred by the consignee will be the responsibility of the consignor, and over there, all the expenses incurred will be responsibility of the buyer. Account sale is submitted by the consignee to the consignor, and over there no account sale is required to submit it because this is a transaction of sale. And over here the last important point, the goods are sold by the consignee against commission, and over there the goods are sold by the seller to the buyer against price. Now one more important thing, let's go to some accounting cycle. This is the operating cycle of consignment. Over here, the first important point which we will be starting, that first concentrate over here, important point. Goods will be sent by consignor to consignee. The first important point, goods will be sold by the consignor to the consignee. First, very, very, very important point. Goods will be sent by the consignor to the consignee. Along with the goods, who is sending the goods? Consignor is sending the goods. So, along with the goods, consignor will be sending the goods. Along with the goods, he will be sending an invoice known as pro forma invoice. Sir, what do you mean by pro forma invoice? Pro forma invoice means what? It is just like an invoice. Just like an invoice. The first step, goods will be sent by the consignor to the consignee. Along with the goods, pro forma invoice will be sent. It is just like an invoice. In that, name of the consignee, address of the consignee, contact number of the consignee. After that, many things like the first important point, quantity of the goods, description of the goods, how many the rate per unit of the goods will be given in the pro forma invoice. The first step. Second step, consignor will be incurring some expenses. Consignor will be incurring some expenses. After the expenses are incurred by the consignor, the goods are given to the consignee. When consignee will receive the goods, consignee will be also incurring some expenses. Like he will be incurring expenses like loading, unloading of goods, then warehouse rent of the goods. All the expenses that will be incurred by the consignee will be reimbursement by the consignor. It means that the expenses which the consignee has been incurring, all the expenses will be reimbursed by the consignor. It means that, what do you mean by reimbursed? Consignor will be paying the amount of expenses which has been incurred by the consignee. And then fourth step, consignee will be selling the goods. When consignee will be selling the goods, there will be transfer of ownership. Transfer of ownership from whom to whom? From consignor to the customer, not consignee. Because consignee is my agent. There will be transfer of ownership from the consignor to the customer. We are done with the fourth point. Fifth point, consignee will be giving the commission. Consignor will be giving the commission to the consignee and all the expenses which has been incurred by the consignee. Last point, the very important last point, consignee will be sending a statement known as account sale. Sir, what is written in the account sale? In account sale, it will be stated that how many goods has been sold, at how many price, how many expenses has been incurred, if any advance is made by the consignee to the consigner, then the amount which is payable to the consigner will be shown in the account sale. It is a statement prepared by the consignee, will be given to the consigner. These are the 6 points. Goods sent by the consigner to the consignee. Pro forma invoice will be sent. It is just like an invoice. Consigner expenses will be incurred. Consignee expenses will be incurred. Consignee will be selling the goods. There will be transfer of ownership from the consigner to the customer. Consignee will be getting the commission which has been decided, and all the expenses which has been incurred by the consignee will be reimbursed, and at the end consignee will be preparing a statement known as account sale and telling how many goods are sold, how much expenses has been incurred, and how many goods are unsold. All the details will be available over here. Goods are sent by the consignor to the consignee. Consigner incur expenses to send the goods, already explained over there. This point is extra point. Consignee may pay advance or accept a bill of exchange. Now only we have studied the topic of bill of exchange. What will be happening? When the consignor will be selling the goods, sending the goods, not selling the goods, consignor will be sending the goods to the consignee. When consignor will be sending the goods to the consignee, he will be asking from sir advance which has been received from the consignee, or accept a bill of exchange, because it is a transaction like a credit transaction. We are sending our goods. It might so happen all the goods which we have sent will be lost. We will be having a loss. So that is the reason why we will be asking for some advance or accept a bill of exchange. Consignee incur expenses for receiving, carrying or holding, and finally selling the goods. Consignee will be also incurring some expenses for receiving, carrying, holding, and finally selling the goods. Consignee maintains a record of all cash and credit sales. Consignee prepare a summary of result called as account sale. Very, very, very important. Consigner pays commission to the consignee. Consignee remits the amount to the consigner after deducting expenses incurred and commission receivable. It means that whenever the consignee will be sending us the amount that is receivable from the consignee, he will be deducting all the expenses which has been incurred by him, and also one more important point, he will be also deducting his commission. For example, total 50,000 amount is receivable from the consignee. Out of this, 3,000 are the expenses which has been incurred by the consignee, and 1,500 commission has been receivable. So consignee will be giving us the amount of 50,000 minus 4,500. He will be giving me 45,500 only after deducting his expenses and after deducting his commission. Very, very, very important point. If any of the student has yet now till now not joined the WhatsApp community link, kindly join it. It is available in the description box. You will be getting the more updates regarding CMA Foundation CMA Foundation upcoming exams. So kindly join the description box, WhatsApp community link which is available in the description box. So this is the operating cycle of consignment. I hope so everybody is understanding with the operating cycle of the consignment. I will be revising one more time. Goods are sent by the consigner to the consignee. Consigner will incur some expenses. Consignee may pay some advance or accept a bill of exchange. Then consignee will incur the expenses. Then consignee will maintain all the record of cash and credit sales. Consignee will prepare a summary known as account sale. Consigner will be paying the commission to the consignee. Consignee will be remitting the amount to the consigner after deducting the expenses incurred by him and the commission receivable. I hope so everybody has been clear with this point, and we are done with the operating cycle of consignment. So over here, first of all, we have read what do you mean by consignment. It is a way of doing business. It is a way of expanding the business. What are the parties to consignment? Then what is the distinction between consignment and sale? What is the operating cycle of consignment? This is a format of pro forma invoice. ABC toy merchant pro forma invoice, goods sent on consignment basis to Bimal Stores, 80A Nehru Road, Guwahati, date 17 March. Over here, quantity has been given, rate per unit has been given, all the expenses have been over here. Good dispatched, ABC Anurag Verma partner. It means that it is the name of the consignor, name of the consignee. Many times this will not be given in the pro forma invoice, only quantity and rate per unit will be given. A document just like an invoice sent to the consignor by sent to the consignee by consignor for details regarding the quantity, rate and nature of goods. It does not create a liability on consignee like a debtor, but in case of sale, it will be creating a liability on the buyer like a debtor, but in case of consignment, it will be not creating any liability. Very, very, very important. A document is just like an invoice sent to the consignee by the consignor for details regarding the quantity, rate and nature of the goods. The second one is account sale. Account sale is prepared by the consignee and it is given to the consignor, but pro forma invoice is prepared by the consignor and given to the consignee. Account sale is prepared by the consignee and given to the consignor. Account sale for toys sold by Bimal Store on behalf of ABC Toy Merchant were as follows. Over here, the amount of sale is given, expenses and commission is given, if any advance, if any amount remitted will be given, and over here, the consignee signature is given. Statement prepared by the consignee to be sent to the consignor for giving the details of all sales, expenses incurred and commission due, goods destroyed and deducting the amount of advance remitted by him. Statement prepared by the consignee to be sent to the consignor giving details of all sales, expenses incurred and commission due, goods destroyed and deducting the amount of advance remitted by him. Very, very, very important. So I have important documents of consignment business are two. First is pro forma invoice given by the consignor to consignee. MCQ pointer. Account sale given by the consignee to consignor. Summary. Consignor is the principal, owner, risk, profit. Consignee is the agent, possession, no risk, commission. Very, very, very important. Yes, the consignor is the principal of the business, owner, risk will be with the consignor and the profit will be shared by the consignor. Consignee is an agent, possession, no risk and he will be responsible for his commission. Now, sir, there are how many types of commission in consignment? Sir, types of commission? Till now we have just heard about that. That is commission received and commission paid. But over here, there are total three types of commission. The first one is ordinary commission. Second one is del credere commission. Third one is overriding commission or special commission. I will be explaining each point very, very, very conceptually. Kindly listen to it. This is a fee payable by the consignor to the consignee for sale of goods. when the consignee does not guarantee the collection of money from the ultimate customer, the percentage of such commission is generally lower. It means that this commission is given by the consignor to the consignee for the purpose of agency relationship. Which relationship? Agency relationship. You are providing me your services of agency, I will be giving you the commission, and it is known as ordinary commission. This is the fee payable by the consignor to the consignee for sale of goods. When the consignee does not guarantee the collection of money from the ultimate customers, the percentage of such commission is generally lower. Very, very, very important. Del credere commission. Consignor may transfer the risk of bad debts to the consignee and he will be paying extra commission for sale. Such commission is known as del credere commission. Sir, what do you mean by del credere commission? A very, very, very important point. A will be sending the goods, he is the consignor. B is the consignee. Now A is the consignor and B is the consignee. Over here, B will be selling the goods. B will be selling the goods to the consignor and B will be receiving the commission. In many cases, what happened? B has sell the goods on credit basis and the customer has not yet paid the amount to the consignee and the sales has been become bad debts. And over here, B is responsible for only and only of his commission. B is taking care of only his commission. So the bad debts loss will be of the consignor. The bad debts loss will be of consignor. So when the bad debts loss is of the consignor, so consignor will be paying him a extra commission. Known as del credere commission. Very, very, very important. Over here, A has sent goods to B. B is supposed to sell the goods. B is selling the goods and he is taking care of his commission. B has sell the goods on credit basis and the customer refuses to pay the money and it has become bad debts. So bad debts is the responsibility of the consignor because consignor has been taking the responsibility for all the expenses. So in this case, many times what happened? Mr. A, that is the consignor, will be giving to Mr. B, that is consignee, some extra commission known as del credere commission. Del credere commission is given by the consignor to the consignee for preventing consignor from the loss of bad debts. Consignor may transfer the risk of bad debts to the consignee and he will pay extra commission for such sale. It is known as del credere commission. If del credere commission is given, it is the responsibility of the consignee of bad debts and he will debit this loss to the commission earned account. It has been asked in an exam for an MCQ. Very, very, very important. Consignor may transfer the risk of bad debts to the consignee and he will be paying the extra commission for sale. Such commission is known as del credere commission. If del credere commission is given, then the loss of bad debts will be the responsibility of the consignee and he will be debiting which account? Commission earned account. Very, very, very important. I hope so both the points have been clear. First is ordinary commission. Second one is del credere commission. Ordinary commission, it is given to every consignee for the services of agency which has been provided to us. And generally the percentage of such commission is lower because in this case there will be no guarantee of receiving the money from the customer. Del credere commission, Consignor will be transferring the risk of bad debts to the consignee, and he will be paying extra commission for such sale. Such commission is known as del credere commission. Overriding commission or special commission for selling goods at higher price than normal price. Example. I have tell you the cost price is 100. I have tell you the selling price is 120. You are telling me that you are the consignee. You are telling me that I will be selling the goods for 150. So over here, you are earning extra income for me. You will be only getting the profit. You will be only getting the commission. Profit will be shared by only and only consignor. So it will be beneficial for me because the product which I will be selling for 120, you are selling at 150. There will be extra profit. So over here, you will be demanding me extra commission because you have sell the goods of 120 to 150. The extra 30 rupees which we have earned, which I have earned in the nature of profit, I will be sharing with you, and it is known as overriding commission or special commission. Selling the goods more than the price specified. The normal price was 150. You are selling the goods at the normal price is 120. You are selling the goods at 150. So you are selling the goods more than the normal price. So you will be getting commission. Which commission? Overriding commission, that is extra commission. That is what? Extra commission. So there are total 3 types of commission. First one is ordinary commission, second one is del credere commission, and third one is overriding commission. Ordinary commission is given by every consignor to the consignee for the services of agency provided by him. Del credere commission is given by the consignor to the consignee to transfer the risk of the bad debts to the consignee, and the responsibility of collecting money or the bad debts will be totally of the consignee. If there are bad debts, consignee will be debiting an account known as commission earned. Overriding commission is a special commission. If you are selling the goods more than the normal price, you will be getting an extra commission known as overriding commission. I hope everybody is clear with this point. Okay, let's go ahead. Types of losses. So there are how many types of losses? First, the losses are classified into 2 parts. First is normal loss, second is abnormal loss. Sir, what do you mean by normal loss? A very important point which you have to remember. Which is unavoidable in nature, which is not separate from the cost. It will be increasing cost per unit, not recorded in the books of accounts. Not recorded in the books of accounts. Sir, what do you mean by normal loss? Which is unavoidable in nature. For example, you know that petrol or diesel, if we kept it in an open space, what will be happening to it? It will be getting evaporated. Example, I have ordered you 1,000 liters of petrol. You have tell me the rate of 50 per liter. Now you are sending me the goods from Chennai to Pune. So in transportation, what happened? When the transportation is going on, some petrol has been getting evaporated because it is unavoidable nature. So when I have received the tank of the petrol, I have received only 950 liters of petrol. So over here, you will be taking money from me, 1,000 into 50, that is 50,000 rupees. That is how much? 50,000 rupees. And second important thing, you will be taking from me 50,000 rupees, but how much petrol I have received? 950 liters. So 50,000 divided by 950 will be approximately 52.63. So when I placed the order, it was 50 per liter and now it is 52.63. It means that it has increases my cost per unit or cost per liter. It is known as unavoidable loss or it is known as normal loss. We will be not recording the loss of 50 liters in our books of accounts because it is of unavoidable nature. When it is unavoidable, which is not separated from the cost, it will increase the cost per unit and it will be not recorded in the books of accounts. I hope so everybody is clear with this. Second one is abnormal loss. What do you mean by abnormal loss? Abnormal loss is always calculated on cost price and not at invoice price. Important. It will be recorded. Sir, why abnormal loss will be recorded? It will be occurring due to what? Accident, fire, flood, earthquakes, etc. So what we can do? We can take insurance for such cases because abnormal loss has been compensated by the insurance company. Normal loss is not compensated by the insurance company. Normal loss will be always recorded, always calculating on cost price and not at invoice price. Very, very, very important. It will be always and always calculating on cost price and not at invoice price. It is always separate from cost. It will not increases the cost. We will be recording the abnormal loss in the books of accounts at cost price. So this is very, very, very important. There are two types of losses. First is normal loss. Second is abnormal loss. The loss which we will be not recording in the books of accounts is known as normal loss because it is unavoidable of nature and it will be increasing my cost per unit. But whenever we will be talking the abnormal loss is always and always calculated at cost price and not at invoice price. It will be recorded in the books of accounts and it is always separate from cost. I hope so everybody will be getting this point. It will be not increasing the cost. Normal loss which is in not my control and abnormal loss I can take the insurance of the same. Yes. So the next topic is type of consignment expenses. So there are how many types of consignment expenses? There are two types of consignment expenses. First is consignor expenses. Second is consignee expenses. Sir, why the differentiate between consignor expenses and consignee expenses? Because while calculating the closing stock, only and only consignor expenses and consignees non-recurring expenses will be taken. Very, very, very important. While calculating the closing stock, all the expenses of consignee will be taken and consignees only and only non-recurring expenses will be taken first. Example, freight, carriage, loading, unloading, transit insurance, all the expenses of consignor will be included in the valuation of closing stock. But whenever we talk about consignees, the consignee will be having some expenses which is of recurring nature and which is of non-recurring nature also. Example, if the expenses are of non-recurring nature like duties, taxes, carriage, clearing expenses, loading, unloading, all these expenses are one-time expenses and it is non-recurring expenses. it will be included in the valuation of closing stock. But if it is recurring expenses, that is selling expenses, commission, go down rent, it will be not included in the valuation of closing stock. So consignment expenses of two types. First is consignment expenses of two types. Consigner expenses. All the expenses of consigner will be taken in valuation of closing stock. But in case of consignee, only and only consignee's non-recurring expenses will be included in the valuation of closing stock and not the expenses of the consignee which are of recurring nature. Recurring nature, it will be happening again and again, right? Advertisement expense, go down rent, salary, all these expenses are of recurring nature and it will not be included in the valuation of closing stock. So very important point. Consignment expenses two type, consigner expenses, consignee expenses two type, recurring and non-recurring. Uh, Before going with the entries, I will be telling you an important topic which has been asked in the exam regularly. Consigner Consigner can send the goods to the consignee at cost or at invoice price. Kindly note it down. Whenever the consigner will be selling the sending the goods, not selling, consigner will be sending the goods to the consignee. Consigner will be sending the goods to the consignee at cost no unrealized profit or no loading element. But it might so happen that consigner has sent the goods to the consignee at invoice price. Now, example. If the cost price is 100 and you have sent the goods at 100 only, no issues. But if you have sent the goods at 120, over here, loading will be 20 rupees. Sir, why consigner will be doing, for example, I am purchasing the goods at 100, so my cost price is 100. I know that if I send the goods to you, that is my consignee, at rupees 100 only, you will be selling the goods at 110 or 105. So what I have do that, I have tell you that the cost price of the goods is 120 rupees. So you will be selling the goods more than the invoice price or at the invoice price. So it will be helping me to generate profit. So many times what happen, consigner will be sending the goods to the consignee at invoice price. Examples. So we have to calculate a loading element in that. Example number 1. X sends goods to Y costing 2 lakh at a profit of 25% on cost. Over here, X has sent the goods to Y costing 2 lakhs at a profit of 25% on cost. So 2 lakh is the cost price. What is the profit margin? 25% on cost plus 25%. So 2 lakh plus 25% will be 2 lakh 50,000. it will be invoice price, and this 50,000 will be the amount of loading. Very simple first example. X send goods to Y costing 2 lakh at a profit of 25% on cost. Very, very, very simple. 2 lakh is cost and 25% profit on cost. So I have to add the 25% on the cost. I will be getting the invoice price, that is 2 lakh 50,000. Example number 2. Mr. Y send goods to Mr. A of costing 3 lakh 50,000. At an profit of 25% on sales. Here, very, very, very important. X has sent goods to Mr. A of costing 3,50,000 at a profit of 25% on sales. How many percent of sales? 25% on sales. Over here, cost price, invoice price, 25% on sales. So let the selling price, invoice price or selling price be 100. I am earning 25% on sales. So over here 25%, 100 minus 25%, cost price will be 75. And what cost price we have given with 3,50,000. So 3,50,000 into 100 divided by 75. 4,66,666. Over here, the cost price is 3,50,000 and the invoice price is 4,66,000. So the profit margin is 1,16,666. So this is the way, it is known as cross multiplication. Over here in the question, I have given with the cost price and I have given the profit margin on sales. So what I have do that, I don't know the exact profit margin on cost. So simple. Let the selling price be 100 and the cost price be 75. So it will be 3,50,000. Cross multiply, it will be 4,66,666 and the difference is 1,16,666. Over here, both are on cost. The goods sent are also given on cost price and the profit margin is also on the cost price. So I hope so you are clear with these two example. Example number 3. Mr. Ram sent goods of invoice price 5 lakhs. Mr. Ram sent goods of invoice price 5 lakh at a profit margin of 25% on cost. Over here, invoice price is given 5 lakh and profit margin is 25% on cost. Again, CP, IP. CP means cost price, IP means invoice price. Over here, the profit margin is 25% on cost. So let the cost be 100. Invoice price 125 because plus 25%. The invoice price is given 5 lakh. 5 lakh into 100 divided by 125. 4 lakh minus 5 lakh will be 1 lakh and that 1 lakh will be your loading element. Over here we have find out the cost price also, because in the question invoice price is given but the cost price has not been given. The third example is very important. Invoice price is given and the profit margin is given on cost. So I have calculate with the help of cross multiplication, let the cost price be 100 and the invoice price will be 125. The invoice price is 5 lakh. I will be getting the amount of 4 lakh. 4 lakh will be the cost price and 5 lakh will be the invoice price. The difference of 1 lakh is loading. Example 4. Cost price, invoice price, cost price. Mr. Gopal sent goods of invoice price 2 lakh to Mr. X at a profit margin of 20% on sales. So Mr. Gopal has sent the goods of invoice price 2 lakh, Mr. X, at a profit margin of 20% on sales. Therefore, here invoice price is 2 lakhs and it is 20% on sales. $40,000 will be your answer. Answer will be how much? 40,000. Gopal sent goods of invoice price 2 lakh to X at a profit margin of 20% on sales. So both are given on the invoice price. Direct multiply the same. Over in the above case also. First case, both is given on cost. Direct multiplication or direct addition. But in case of we have to calculate the loading element, we have to multiply the amount with the same. If it is cost price, multiply it with cost price. If it is invoice price, multiply it with the invoice price. I hope so everybody is clear with this. So the concept of invoice price is done till over here. I have done with 4 examples. Two more examples for you all. More 2 examples. Mr. Y. Mr. Y sent goods of rupees 10 lakhs to Mr. X at a profit margin of 20% on sales. So over here, it is 20% on sales. Cost price, invoice price. Cost price is given 10 lakhs. 20% on sales. Let the selling price be 100. Cost price will be 80. So 10 lakhs into 100 divided by 80. 12 lakh 50,000. So the difference of 2 lakh 50,000, it is loading. It is what? Loading. Example number 5 is on your screen. I have taken till of 5 examples. Sorry. Let's go with example number 6. Mr. M send goods of invoice price 6 lakhs at a profit margin of 20% on cost. Yes. Mr. S send goods of invoice price at a profit margin of 20% on cost. So यहाँ पे आपको सबसे पहले निकालना पड़ेगा. So sorry everybody. Over here, Mr. M send goods of invoice price 6 lakh at a profit margin of 20% and cost. So over here, invoice price is given and profit is given on cost. So cost price, invoice price. Let the cost price be 100 and the invoice price will be 120. So the invoice price is 6 lakhs. So 6 lakh multiplied by 100 divided by 120. So the answer will be 5 lakh. The cost price will be 5 lakh. The invoice price will be 6 lakh. The difference of 1 lakh is known as loading element. The difference of 1 lakh is known as loading element. So over here, I have completed the topic of invoice price in consignment accounting. Only and only invoice price has been completed. I have taken approximately 6 examples. You have to revise all the 6 examples. Then only you will be getting more clarity of that. Yes. Come ahead. Now, let's go to the journal entries in the books of consignor. Journal entries in the books of consignor. For goods sent on consignment to the consignee at invoice price or cost price. Whenever the goods will be sending, consignor will be preparing an account known as consignment account. It is a nominal account. This account is prepared to find out the profit or loss on consignment. The first entry is consignment account debit to goods sent on consignment. Very simple. The first entry will be consignment account debit to goods sent on consignment. Loading on goods sent only if the goods are sent at invoice price. If the goods are sent at invoice price, there will be an element of loading which we have to reverse it to find out the correct profit or loss. So that's why the first entry which we have passed, that is consignment account debit to goods sent on consignment, we have to reverse the entry. If the goods are be sent at invoice price, the entry will be goods sent on consignment account debit to consignment. Very important first two entries. Whenever the goods are sent, the entry will be consignment account debit to goods sent on consignment. And if the goods are sent at invoice price, there will be an element of loading which will be in the invoice price. We have to reverse that. That is the reason why the entry will be goods sent on consignment account debit to consignment. For expenses incurred by the consignor, whenever the expenses will be incurring, the entry will be expense nominal account debit all expenses, credit all income. Expenses account debit to cash or bank. And over here, expense is a nominal account. Instead of nominal account, we have to use consignment account. So the entry will be consignment account debit to cash. The third entry is what? Consignment account debit to cash. Instead of nominal accounts, we have to write consignment account. Instead of income or expenses, we have to write consignment account. For expenses incurred by the consignee. Whenever the expenses are incurred by the consignee, who is incurring the expenses? Consignee. So expenses account debit, because debit all expenses, credit all income. Who is the payer? Consignee. Consignee which account? Personal account. Debit the receiver, credit the giver. Expenses account debit to consignee. Over here, expenses which account? Nominal. Instead of nominal account, which account? Consignment. So the entry will be consignment account debit to consignee. Very simple. For sales affected by the consignee, whenever the sales are affected by the consignee, what is the entry for sale? Cash account debit to sales. Cash serial account debit what comes in, credit what goes out. Credit, debit all expenses, credit all incomes to sales. Instead of sales, you will be writing consignment account. And instead of cash, the money has been received by the consignee. Consignee is a personal account, debit the receiver, credit the giver. Consignee account debit to consignment. For commission payable to the consignee. For commission payable to the consignee. Whenever the commission is payable to the consignee, so commission is an expense, debit all expenses, credit all incomes, commission account debit. To consignee, because we have not yet paid the amount, we have to pay the amount. Instead of commission, we have to use consignment because commission is a nominal account and we have to pay the amount to the consignee. Settlement amount paid by the consignee to the consignor. Consignee is paying the amount to the consignor. We will be receiving the money. Cash serial account debit what comes in, credit what goes out. Cash account debit. From whom we have received the money? Consignee. Consignee personal account debit the receiver, credit the giver. Cash account debit to consignee. Cash account debit to consignee. Closing stock will be recorded in the books of consignor. So over here, the entry is what? Consignment stock is an asset for us, and due to matching concept, we have to record it on the credit side of consignment account because consignment account, it is similar to your trading P&L account. It is similar to your trading P&L account, and in trading account we know that consignment account, whenever we have to record the closing stock, we have to credit the consignment account or the trading account. So the entry is consignment stock account debit to consignment. It is an asset by nature. Only the position has been transferred, ownership has not been transferred. For abnormal loss, what is the entry? Abnormal loss account debit to consignment, because the goods has been gone out. Whenever the goods are destroyed by fire, the goods are theft, goods is destroyed by some natural calamity, in that case the entry will be what? Abnormal loss account debit to consignment. On return of goods by the consignee, what is the entry for goods sending? Consignment account debit to goods sent on consignment. Reverse this entry, goods sent on consignment account debit to consignment. Very, very, very important. Over here, we have completed the journal entries of consignment. Very, very, very simple. First, for sending the goods, the entry will be consignment account debit to goods sent on consignment. If the goods are sent at invoice price, there will be an element of loading involved with. Reverse it, goods sent on consignment account debit to consignment. For expenses incurred by consignor will be what? Consignment account debit to cash or bank. For expenses incurred by the consignee will be what? Consignment account debit to consignee. For sales affected by the consignee will be what? Consignee account debit to what? Consignment. And if the commission is payable to the consignee will be what? Consignment account debit to consignee. Then for settlement of amount, bank account debit to consignee or cash account debit to consignee. Closing stock, consignment stock account debit to consignment. And if the closing stock is on invoice price, reverse the loading by using which account? Stock reserve. If on invoice price, reverse by stock reserve. Entry for abnormal loss account debit to consignment. On return of goods, goods sent on consignment account debit to consignment, and it is the format of consignment account. To goods sent on consignment, to consignor expenses, to consignee expenses inclusive of commission, to goods sent on consignment, it can be reversal of loading element, consignment that is sale, abnormal loss, closing stock, to stock reserve, loading on closing stock, and you will be getting profit or loss as a which figure? Balancing figure. Profit or loss as which figure? Balancing figure. Over here, we have completed the account of consignment and we have completed the journal entries which has been important in the consignment accounting. Now the last point is pending, that is valuation of closing stock. This point is pending and we have to go with our MCQs and then we have completed this chapter. So valuation of closing stock in the godown. Whenever we will be valuing the closing stock in the godown, what will be the components? First, cost of goods. There are two methods: cost of goods plus proportionate non-recurring expenses plus proportionate non-recurring expenses of the consignee. Basically, consignor all expenses will be included and consignee's non-recurring will be included. Valuation of closing stock method: first, cost of goods sold, cent, cost, invoice price, consignor expenses, and if there is an abnormal loss or normal loss, the abnormal loss is over here in godown. I'll be writing the format over here. Valuation of closing stock. Goods and add consignor expenses less normal loss, only units will be minus, add consignees less abnormal loss in transit, add consignees non-recurring expenses less abnormal loss in godown. So this is a format of valuation of closing stock. Many times majority of items are irrelevant. First, goods sent, that is the cost price, plus consignor expenses. If any abnormal loss, if any normal loss, only quantity will be minus. If in case of abnormal loss, quantity as well as amount both will be minus. Add consignees non-recurring expenses less abnormal loss in go down. So this is a format, noted down. Copy it fast. Put it down. I will be also taking some example of the same. You will be getting more clarity, and then we'll be going with the MCQs, and then we are completed with the topic. Copy it fast. I hope everybody is noted down over here. Closing stock is equal to goods sent less abnormal loss less normal loss less goods sold. So quantity of closing stock will be goods sent less normal loss less abnormal loss less goods sold. Value of closing stock will be cost of goods available for sale, cost of goods available for sale divided by total quantity multiplied by closing stock quantity. Goods sent less normal loss less abnormal loss less goods sold will be giving you the closing stock quantity. Example, the goods sent were 1000, normal loss were 100, abnormal loss were 200, and the goods sold were 500. So over this, the closing stock is 200. So cost of goods available will be available over here. Cost of goods divided by total quantity will be over here. Multiply by which quantity? Closing stock quantity. You have to note it down. Very, very, very important. How to calculate the closing stock quantity and how to calculate the value of closing stock. Everybody note it down. Then we will be going to our MCQ part and we will be covering this chapter of consignment. Note it down. Rest of the part will be taken care in the next lecture. I will be covering the MCQs in the next lecture. Till then, everybody keep studying. And if you have not yet subscribed the channel, kindly subscribe it because the lectures are conducted and recorded in English and not dubbed in English. It will be very beneficial for you to clear your CMA foundation exam. Till then, everybody keep studying. Bye bye. Take care. Do join the WhatsApp community. Do like the video. Do share. Do subscribe. Bye bye.